Ladies and gentlemen, become a profitable trader. All I know. That's what we're going to talk about today. If you have missed my live show on Banter, shame on you. No, I'm just joking. If you have missed it, please go watch it. This is not what we usually do. We actually have a complete show every single day with news and charts and whatnot. But because I covered everything on Banter, I think it's a very good opportunity for us to look at some educational content, and we can look at the market and we can look at the trades that I posted about yesterday on my Twitter. But if you want to learn how to trade, this might be the best opportunity. I'll get a lot of questions. What is a market structure shift? What is a market structure break? How do you spot liquidity? What is USDT dominance? How does that relate? What are time frames? What do I mean I confirm and lower time frame? What is a higher time frame? What is a premium and discount zone? How do I do the 50% retrace? How do I use the tool on TradingView? What is accumulation, manipulation, distribution, and much more? We're gonna talk about that today. Guys, I ask you one thing and one thing only, and that is to obliterate the like button. It literally takes you 2 seconds. It really does help the channel and does help me. I've been on holiday. I'm so happy to be back, and I'm so happy to see all of you here. Actually, I see a bunch of people already here, which is absolutely insane, awesome, legendary to see. So let me chat a little bit. What? Let me check a little bit. Michael in the house. Guys, I actually bought a new computer and it doesn't recognize the internet, so we had to swap everything back and forth, and it's just the whole studio is messed up. BTC ripping. I told you it will. I told you it will. Did I not tell you it will? Yes, I did. Let's go like the smashes. That's what's up. Good show on Banter, Fefe. Thank you very much, Tom. Welcome back, bro. Thank you so much, Brian. GM, Organozoom, 0. Is this the first time I see you here? If it is, clap, clap, mofo. Nice having you here. We love you. Muddy Nate, I love you back. Working overtime, are we? Of course, we always are. What's up, cars and crypto? All good, all good. Smash the like. Great. Legend effing dairy. Less. No live for 5 days. Holy quali moly. You know, my daughter says, holy cow, when she likes something to eat, or, you know, something is delicious, she says, holy cow. She actually says, holy cow. But that's what's up. So yeah, no stream for 5 days. Holy cow. Oh, it's good being back. From Puerto Rico. Buenos dias. New to this channel. Pickle. I love your name. I love your picture. Thank you for the Banter show. Very informative. Ark, I'm so happy to have you here. You're very welcome. Let's effing go. 12:30 midnight in Australia. Nice. You guys are drunk on that time zone. Like, that's like literally like the States and then Europe and then Asia and then Australia. Like somewhere here. It's like, I don't know what you guys doing up there, but it's so happy to see you here. I'm so happy to see you here. What's good, Fete? Nothing. Ahoy, Nitro Bunny in the house. Okay, let's go. Nitro Bunny is here. We can go. I've actually just been waiting for Nitro Bunny. Okay, let's go. So, the first topic. Let's look at Bitcoin. Come on, I can't ignore this. What's my profit on my account? So my costs told me today morning. I came in. I was heavy long in the competition. I'm like, dude, we're going up. Everything is good. He's like, no, sell everything. Close the positions. We're gonna fall. Close the positions. And I'm like, bruv, chill out a bit. But I closed like 60% of the positions because we are accountability partners to each other. So I closed it, and I missed out, just for your information, I missed out at about $4,500 from this morning. Thank you so much. Okay, so he says he didn't close it. He just told me to close it. Okay. So you want all the profits. Great, no problems. So anyway, we missed out on about $4,500 worth of profits from the morning. So that's coming off from your salary. Nice. Good. Okay. Anyway, let's jump into it. I'm up pretty decently now on these trades that I took yesterday. If you followed, I was just watching Annie. Annie should come to the channel. We should put up a vote. Should we get Annie on the channel? Because I think she would love to come on. I would love her to come on, and it would be a great collab. So I tweeted all this yesterday. I don't know if you follow me on Twitter or not, but if you do, then you have taken these trades. I've literally been updating you from the very beginning, and I said here, I didn't have time to fight it on Banter, but I'm finding it here for you guys, so we're not lost. I said, a First of all, I said you should rewatch Friday's show where I predicted exactly what's happening, that we're going to dip down to the 2.2 region. I said we're going to come down to the 2.2, then we came down. And then I said I took a Bitcoin long at 60,880. That's still open. Close below 60K on 1 hour will be bearish. The only reason why this didn't turn out to be bearish is because I looked at the total market cap, also long Sol, INJ, WIF. And then I posted all this, and then I posted all this, and then I guided you through the thing. Now, the question really is, how did I do this, and how you can do the same, and how you can learn from everything that I trade and how I trade. So the first topic we're going to talk about today is USDT, the total market cap, USDT dominance, Bitcoin, DXY. Let's look at it. Number one, Bitcoin is fairly nicely pumped. Let me look at my WIF entry. I'm up 140% on WIF. 140% on WIF on 10x leverage, which is I was yeah, rocket ship, mofo. But we still need to break above here. We still need to break above 2.17. If that happens, I'm holding this bitch till $4. I'm not selling WIF until $4. The hat stays on. Okay, what? Okay, first things first. USDT total market cap, DXY, USDT dominance, Bitcoin dominance, and much more. First off, you want to look at DXY, okay? The reason why I want to look at DXY is because although it's not that relevant, okay? Although it's not that relevant anymore, in relation to the risk assets, it will be very relevant when the government or the Fed cuts rates, okay? So DXY is the dollar index, which is basically measuring a bucket of other currencies against the dollar. So it's the relative strength of the dollar compared to everything else. And if it's going up, that means, you know, the dollar is strengthening. And if it's going down, as we see here, it's quite decently decreasing since the 90s. It is not that bullish. Now, when they announced that they'll increase interest rates, we saw a massive pump, and now we see a consolidation. When the talks started to come in about potentially reducing the interest rates, we saw a decent pullback, and now we're retracing to the 50, to this bearish POI, and then we're going to continue the descent of the dollar to the nowhere, to the bottom, not because of crypto, but because of all the bricks and everything that except if Trump wins. I mean, if Trump wins, if Trump wins, this could be very. We have John Joe, when you subscriber here. What's up, John Joe? Nice having you here. Okay. So this is a bearish OB. Anyway, so you got to look at DXY. If the DXY is pumping, risk assets, for example, crypto, usually suffer. Why? Because people move towards the dollar as an investment and don't move towards risk assets like crypto. If there is a higher interest rates on borrowing, that means that for you to get your dollar, it's more tempting investment opportunity. Tend to gamble on shit coins around the place. So that said, the DXY is negatively correlating to the total market cap. Now, if you don't know, you can write in total. And total is basically the total crypto market cap, including everything. So that's like everything. That's including the stables. That's including everything. Every money in crypto is in the total. Now I'm thinking if I'm saying something stupid. I think it includes the stablecoin market. Yeah, exactly. It does include stables. Okay, cool. So I'm not saying something stupid, just so we're clear. So usually it negatively correlates. So when you see the DXY pumping, the total market cap usually dumps. Now, if you look at the total market cap in itself, though, you can see that by in and of itself, the total market cap is the relevant information, is the relevant chart or is the relevant data to look at. Why? The total market cap represents everything in crypto. So if you've got different buckets, you've got real estate, you've got precious metals like gold and silver, you've got, I don't know, stocks, S&P 500, and, you know, all this stuff. If you buy these, there is crypto as a different bucket. Now, the value of that bucket, which means everything included, is the total market cap. So this chart actually represents what the total value in crypto is right now. Currently, that's $2.2 trillion. So every shitcoin, every Solana meme coin, every base meme coin, including Bitcoin and Ethereum, if you add up the current value of all these tokens, you get $2.2 trillion. Why do I say that the total market cap is something you should follow? The reason why I say that is because if the total market cap is making moves in the chart, that means that the crypto market as a whole is making moves, okay? So it's not Bitcoin breaking out because of something. It's not Ethereum breaking out because of news. It's not XRP dumping because it's just an everyday, everyday life, jokes aside. So it's not individually looking at the tokens, but looking at as a whole. By looking at as a whole, you can take a conclusion on where the entire market is headed. That's why it's very important to chart on the total market cap to understand it first. Now, there are different things. For example, the dominance, which shows you that within this bucket, what dominates the bucket? What's the biggest, what proportion of the bucket is this specific asset? For example, you can look at USDT dominance. That means what percent of the total bucket, crypto bucket, is the USDT dominance. Okay, so if I have, let's say, $100 worth, $100 is the total market cap of my bucket, and I have $5 worth of USDT, that means that the dominance of the USDT within the bucket is 5%. As the dominance goes up, that means that within the total market cap, there is reallocation of assets and people move from crypto, from Bitcoin, from Ethereum, from meme coins, whatever, into USDT. That's why the USDT dominance is increasing, okay? Now, if you see that USDT dominance is decreasing, that means that people are more risk averse, like they take on more risks, and they reallocate their portfolio in a way that they keep less USDT and deploy more capital into Bitcoin and Ethereum and whatnot. Why is this important? It's important because if the total market cap is growing and USDT dominance is decreasing, that means that there is money flowing into crypto because the total market cap is going up, but there is money flowing into different crypto assets other than USDT. So people don't come in to keep stables, but they actually come in and buy the crypto they want to buy. That's an extremely bullish sign. This is what we see as well. So if you look at it, now the USDT dominance is going down, but if you look at the total market cap is pumping, okay? So that's why it's very, very relevant. You can trade this on the lower time frame, higher time frame, but you have to use this to your advantage. And then there's one more that you might want to look at. There's Bitcoin dominance, Ethereum dominance, Solana dominance, but there's Bitcoin dominance, which usually hovers around 50-60%. And when the alt season comes, it goes down all the way to like 35-40%, okay? That means that every value in crypto, only 40% of that is in Bitcoin, okay? So how connecting all the dots? Number one, which is very important, is that the total market cap follows the DXY, okay, and the macroeconomic situation, Fed fund rates, whatnot. Bitcoin follows the total market cap. If the total market cap is going up, usually what we see is that Bitcoin price is going up as well. Everything else follows Bitcoin. So every other crypto asset follows Bitcoin. If Bitcoin is not behaving, other cryptos don't behave as well. Maybe they do, and that's when we see an altcoin rally. When compared or relative to Bitcoin, you see altcoins moving, but that's another topic. So everything follows the total market cap, and most of the time, everything follows Bitcoin as well. So that's out of the way. Let me look at some questions. If you have any questions to this, I would love to see. Let me know now, and then I can answer the questions. By the way, guys, something crazy happening to 𝗕𝗘𝗢. Don't tell me that I have not warned you, okay? I told you at 1 million to buy in. I told you at 12 million to buy in. I'm telling you, not financial advice, but if you want to buy in, this might be the perfect time to buy in, okay? I warned you. I just don't want you to come in here and say, oh, miss all the fucking calls that you make. Okay, and it's a complete gamble. It can go to zero. I haven't sold a single token, but okay. New subscriber, we talked about this, John. Nice. What about meme coin giveaway you state? Yeah, so we do have the meme coin wallet. It's completely screwed, but we do have the wallet. We are going to give it away. I just need some time. Like and subscribe, fam. Yes. Felon, hey Fefe, missed you yesterday. I missed you too. Like, follow, and subscribe. That is what is up. The 𝗕𝗘𝗙𝗢𝗢 lol. My cousin is like typing things here. Lol, XRP dumping as usual. Yes, that's the stable coin we need. New background, nice. Irene, yes, new background. Nice having you back here. Thank you for being generous and kind. True love from the heart. That's right. Fefe Alpha Bullet. Yes. Alpha Bullet, yes. Buy Tucker, right? Fefe. Not financial advice. I don't think it's a bad idea though. INJ, I'm long, I'm heavy up. New PC, okay, but what about the chair? Now, just let me clarify something. New Mac, not new PC. No, I'm just. We have this fight here, whether it's Windows or Mac. Put up a vote. Put up a vote. I'm telling you, we're gonna have 70% saying Mac. 70% of them saying Mac. Okay, Felon, yes, it's a great time to buy Felon as well, in my opinion. Getting listed on Blowfin. Before the debate, so that's good. Welcome back from holiday, fam. Well, thank you. Excited for these 2 weeks in crypto. Thank you. Ada and Jasmine, please. And love the new look. Background. Andy, thank you. And Mac all the way. Mac, definitely. Bruv. You can just... Okay. Did you read course regarding your strategy or you formulated it? Because to be honest, it's really working. Yeah, so here's the thing. I actually gathered a lot of things from all around the place. I started off 2018. I was on and off profitable. So like on and off, but the strategy wasn't working. That's the big difference. It's not because of the mental thing. The strategy was working sometimes, it didn't work sometimes. I was using like, like the basic stuff, RSI and trend lines and all this stuff. And I realized that there's much more to trading. And then I started focusing on really learning. And that's when I met one of my big mentors, Rain. He taught me a lot of things. He basically ignited my interest in smart money concepts. And then from there on, for months and months and months, I was just consuming content. And that's how I ended up here. So so whatever I trade now, I can say it's my strategy. So I collected a lot of things from a lot of people in a lot of places. And now I haven't fully worked that strategy in my head that I follow. But that's it always like it's the patch. It's always you get a patch from someone, you get a patch from something, and then that's it. I look much more muscular on the screen than in real life. I look chubby in real life. Okay, because I'm chubby in real life, 62% Windows. 62% Windows. What the fuck is wrong with you guys? How many? 2 votes or what? 56 votes, nothing. Guys, vote Mac or Windows. Okay, let's move on to the next topic, which is time frame. Okay, time frames, guys. Very important. So somebody's saying, what do you mean on the other stream I said dagger in the heart on pith? It's just a liquidation event. We're going to talk about that in a second. So somebody's saying, so what is AR, what is AR doing here? I'm just seeing AR. Oh, it's taking these highs here. Oh, taking liquidity. Oh, what? So this could be a great trade. Oh, yeah, it could be. Okay. So next topic is time frames. We have to talk about time frames because this is also a confusion that a lot of people have on my shows. Here is the way to look at it. Higher time frame, whether it's the weekly, the monthly, the 3-day, the daily, the 4-hour, the 2-hour, the 1-hour, it doesn't matter. Higher time frame trade is the trade that you trade the trend with. Okay? So when I say higher time frame, I usually define whether a higher time frame is the 4-hour or daily. But if I trade the 1-minute chart, a 15-minute can be higher time frame because it's higher than the chart that I'm actually looking at to take confirmations and take my trades. But the higher time frame is always based on the trend. What higher time frame trend I am trading with. So for example, if my higher time frame, let's say it's the hourly higher time frame, what I want to see a retrace to the 50% on the higher time frame discount area. I'm going to talk about that in a second. Guys, by the way, subscribe to the channel. Subscribe to the channel, please. Smash the subscribe button. We do crazy things here. I'm just, getting the ear vex out of my ear, sorry. So we do crazy stuff here, guys. We do crazy, what are you smiling? What is 70% Windows now?
67.
67. Okay, you guys are okay. I'm out. Bye bye. Nah. Anyway, so if you guys want this content, please subscribe to the channel, okay? Please, because I'm gonna be sad if you don't subscribe, and you don't want me to be sad, because if I'm sad, I'm crying, and if I'm crying, I can't speak, and if I can't speak, I can't explain the concepts that I'm doing. So please just smash and obliterate the subscribe button. Let's get back to the chart. So 50% retrace here. I'm talking about the higher time frame, ladies and gentlemen. Higher time frame, HTF, okay? Higher time frame. Let me, for the num-nums, let me write here. I'm just joking. Nobody's not num-num. It was a joke. It was a joke. It was a G.I. Jane joke. Higher time frame, okay? You're waiting for a 50% retrace, for example, on a higher time frame. You want to see the higher time frame. You want to see the higher time frame retrace happening. And then you want to take a confirmation on the lower time frame. Which, for example, if this is the 1 hour chart, I always say you have to take confirmation on the 5-minute chart. So if I zoom this in and I say, okay, so I'm trading the higher time frame is the 1 hour time frame. That's my higher time frame. I will need to take confirmations for the trade on the lower time frame, which will be the 5-minute. I'm going to deep dive into what time frames you should use, higher time frame versus lower time frame. But when I say you have to take a confirmation on the lower time frame, that means if, for example, we trade on a higher time frame, that could be 1 hour is the higher time frame. This should be the 5-minute chart. This is what I want to see on the 5-minute chart. A market structure shift, which again, I'm still going to talk about in a second. But time frames always relate. It's very important to understand that trading the higher time frame, you are trading with the trend of the higher time frame. Okay, so if I say trade with the trend, trade with the higher time frame, I can say trade with the daily trend, take 4-hour confirmations. Trade with the 4-hour chart, take 15-minute confirmations. Trade with the higher time frame, 1 hour higher time frame, take 5-minute confirmations. Trade the 30-minute chart, take 1-minute confirmations. So time frames relate because you have to take it level by level. As you go and you start playing on different time frames, obviously, if, let's say your higher time frame is the daily, okay? This is your higher time frame. What you're waiting for is a 50% retrace on the daily. For you to see a reversal, you need to go down one step and you need to look at the 4-hour structure when you get to this 50% retrace, right? So then when I'm going to explain the 50% retrace and all that. I just want you to understand the idea behind time frames. So when you have the time frames here, 4-hour, then you want to see, this is probably what you're going to see here. In this, which is just looking like one big down, you're going to see something like this. You want to see a higher high for you to confirm that there is a reversal happening and you can target the daily high, right? So when you get a 4-hour confirmation, you get your order in, you put your stop loss below here, and you target the higher time frame high. But for you to know if you will get a 4-hour high, what do you need to see down here? Well, you need to see a 15-minute or a lower time frame confirmation. How would that look? For example, if you're in the 4-hour, you need to look at the 15-minute chart and you need to see what? A higher high. So once you see a higher high on the 15-minute, you're targeting the 4-hour high. Once you see a 4-hour market structure shift, a higher high, you're targeting the daily high. Once you see the daily high, maybe this is just a pullback on the weekly, you know, and then you're targeting the weekly high. And that's how you proceed on time frames, okay? I think that makes sense. I think it's understandable. If not, please keep your questions. We are going to have a Q&A session very soon, okay? So let's talk about point of interest, order blocks, fair value gaps, premium and discount zones. Okay, so point of interest, I call them POI. POI is basically anything that can cause a reversal, okay? So anything that can cause a reversal, that means that, for example, if I'm trading a time frame, it doesn't matter what time frame it is, I will take this as a point of interest. I want to see the chart go back down to my point of interest for whatever. This is actually a bullish OB or order block, but anything can be different areas on the chart potential reversal areas. That's the proper explanation. So this here can be, for me, a POI, a bearish order block, which is a point of interest. Anything between here, I don't want. Either we reverse from here because I say this is resistance. If we close above, I don't care about anything else. I care about when we get into my POI. And then I can mark several POIs, point of interest on the chart, and I don't have to look at the chart until these are hit. Okay? Order blocks. Order blocks are the last bearish or bullish candle before a move. So technically, if you want to be real technical, this would be, for example, a bearish, because we had a bearish move, this would be the last bullish candle before bearish capitulation, and this would be my bearish order block. But this could also be, if you look here, this is the last bearish candle before an impulsive pump. So this could be your entry after a lower time frame, for example, a 3-minute confirmation. Let me look at it. How would that have worked out? So you can take, oh, you couldn't have taken a 3-minute confirmation here, so it didn't matter. But these are the order blocks. Bearish or bullish order block. Bearish order block is when there was a bullish candle in the end and then a massive rejection from there. And bullish order block is if you have the same thing, a last bearish candle before an impulsive move. Now, I actually don't work with these that much because what I do is that I take an entire move. So what I like to do, for example, here, for me, this is the bearish OB because this move, entire move, was responsible for the accumulation for the institutions to dump. Therefore, I take the entire move. If I can't take the entire move because it's just way too big, I go down on the lower time frame and I try to justify it for that. So for example here, same thing. Look, there is like this accumulation area here, which I would say is my POI. Down here as well, look at this. This entire move could be, it becomes a resistance zone actually with all these touches. So then you refine that the exact same way. For example, when you have a dump like this and you don't really have like a proper place to place, you cannot say this is my entire area. What I usually do is that I take a 50% of this. So for example, this is the 50% and I take the bottom of the 50% and I say this is my demand zone. Let's see if it touched. No, it didn't. This would be my POI, and then once you see a pump, this would be my POI. I would need to see a confirmation of bearish OB, and then down here would probably be somewhere down here, the other one. And then I just move on with the chart. This would be my other one, and then all the way up as you move. This is the bearish and bullish order block. Fair value gaps. Guys, I'm giving you so much value. The only thing I ask you in return is to smash the like. Literally, that's the only thing I ask. Please smash and obliterate the like button and let me know if you like this content, if we should do more of these. Because I think it's really, really relevant and helpful. So fair value gap. Fair value gap is basically a gap in the closing and the opening price on a candle. Okay. So here, for example, if you look here, this is a big gap. You see it's a gap because there is no interconnection between the candles. So you see here, there's not really a gap. There is no gap here. You see, there are no gaps here really. Where do you see a gap? Here. This is like a gap. That means that there is no sellers, only one participant is active in the market. So for example, here, this is a gap. You see, because the previous candle, so this is the candle I'm talking about, this here. The previous candle here did only come up until here, and the candle that followed only came up here. And that makes a gap in between here. This is the actual gap, okay? Why is this interesting? It's interesting because a lot of times fair value gaps tend to be filled. Number one, at least 50% of the fair value gaps. And number two, for a proper, so you need to, for you to see an imbalance in the price and for you to confirm that a reversal is happening, you need to see massive, massive, massive fair value gaps because that means institutional buys. That means big whales buying up an asset, okay? So that's what you need to know. Fair value gaps, or FVG. And then premium and discount zones, very important. I talked about this. Markets always retrace 50%. So even if you look at on the daily, it always retraces 50. So for example, let's say we are looking at a bearish scenario. We're looking at a bearish scenario here, an AR. We pull it from the top, we pull it from the bottom. It comes back 50, it goes lower. Then you pull it from, again, you pull it from the top. You pull it to the bottom. It didn't come back 50, so you pull it more. It didn't come back 50. You pull it more. It did come back 50, and then after it rocketed. But then when it goes up, it has to come back 50 as well. So you go up to the top, from the bottom to the top of the move, you get a 50% retrace. What happens after a 50% retrace? You see moon happening. And it always comes back. So for example, if you take it from the bottom to the top, you have the big one here, but you can also take it level by level. So as you see here, for example, I can take it from this leg to this leg. You have the 50% right here, or I can take it from then moving on from this leg to this leg. You have the 50% right here. So markets always retrace at least 50%. And the 50% is relevant because that's what we call premium or discount zones. If you pull the Fibonacci, by the way, this is just a normal Fibonacci tool. You can come in here, you can pick the Fib retracement. And as you pick the Fib retracement, you pull it out, you double click, and you can add or remove levels that you want to see on the chart, you see? So this might look like this for you. What you can do is just to remove everything that you don't want to see, and then you will only see the 0, the 0.5, and the 1, and in the middle is the 50% retracement. Below here is what we call discount, and on top here is what we call premium. Okay? This is what we call. Why? Because institutions and smart money or people with big money, they don't want to buy in premium. They never want to buy in premium except if it's Prada or, you know, whatever. But they don't want to buy in premium. They want to buy in discount. So they want to drive the prices back down. There are a lot of theories behind why hedge funds getting out, break even, whatnot. But what you have to know is that market always comes back 50%, okay? And it goes the same way. So when we are in a bearish scenario, right, we're going down, down, down. Market always comes back 50 for the guys to offload and sell on in premium and then buy back in discount. That's the basic idea here. The way to use it is, again, you can use it. I can go down on a 5-minute chart. I can zoom out here, and I can wait on each pump. I can wait for the 50% retrace. If the 50 doesn't come, it will come at some point. So for example, here you see. Let me just play this here. Why can I not replay? Okay, so I played 50%. Did it come back 50? No, it didn't. Did it have a massive pump after that? Yes, it did. Okay, cool. So I'm pulling it again. Anything below the 50 is a buy. Okay, 50 here, I buy. I target 1-to-1. This is just a simple strategy that I'm going to tell you. I want to target 1-to-1 risk reward. Then I'm just going to wait for it to play out. And I'm going to sell. Good. So now did we make a new high? Yes, we did. So what do? I wait for the 50% retrace. Okay, great. So where's the 50% retrace? Okay, I'm waiting. Either I need to see a high break here, or I need to see it to come back 50%. And I'm just waiting. That's what I do. There's nothing matters. Okay, it comes back 50. This would have been, it literally just touches. This would have been my entry. I am waiting for 1-to-1. Because I buy in discount, I sell in premium. I would have been rigged out. That's done. Okay, now what do I wait? I wait for a close above to be able to confirm. Now I have a close above. Let me just delete everything. Now I need to see a retrace to the 50. I'm waiting for a 50, or I'm waiting for a break above. I do get the 50. I put my entry. I put my stop loss. Target 1-to-1. And I move on. And then this is how I go. And I backtest the strategy. This would have been, again, so 3 out of 3 trades, but this could be 3 out of 3 losses. So you got to backtest it on any chart, but that's the basic idea. You always pull, you always buy on premium, or you always buy on discount, you always sell on premium. That's just the basic idea here. And now I'm getting tired. I feel like it's like 2 live streams and then I have to record a video still. It's like, tiring, bruv. Let's chat. Why is this doing this? Look what it's doing. So I make the... Oh, that's a different one. Make a transition and it's like it puts the screen behind me. But you have the glass there. But I know. Thanks. I bought a Mac Studio and it ruined everything. The Mac Studio ruined everything. But people might ask if you always go for or 1-1. No, it's always depends on the chart. But it's just a simple strategy that I showed you that you could actually trade. R means risk reward. How much leverage do you mostly take? It depends on the risk, guys. This is why I'm so tired of influencers trying to pretend they're traders, because people don't understand that it's not about the leverage. Leverage doesn't matter. Leverage doesn't matter. What matters is risk. Risk. That's what matters. Because leverage, how big leverage? I mean, it's not you. It's not you, Tom. But like, no, Matic. How much leverage you take? It doesn't fucking matter, bro. What's your risk? That's what matters, because leverage is just a tool. So I take between 5x to 75x. Like, that's kind of the range I'm doing. Just bought on premium 15 minutes ago. You see? Now you know. Money making voodoo. That's what's up. What trading strategy would you suggest with small capital? This is what I'm explaining here. Man, Fefe is the OG, can do 2 live streams. Beat back to back, so much energy. Thank you. Too difficult trading, actually. Yeah, it's not easy. What matters is risk, otherwise you lose 12 million ETH. Yes, the guy actually, I hear rumors that the guy actually killed himself. That was a guy who lost 12 million. He put all his life savings on ETH long publicly, and he wrote a goodbye actually on Twitter, and he said that's it. He can't deal with this. Unlimited supply and demand also does that, but it doesn't take account of premium and discount or liquidity. How much risk to be good to go of total capital per trade? It depends on you. If you have a DGen account, sometimes I take 20% of my account as risk, but that's a DGen account. So it depends on you what account you're running. If it's like you're retired, how the fuck can someone still smash the thumbs down? Like, I genuinely think there is someone who's coming here just to smash the thumbs down. It doesn't even watch the content. It just comes in here, smashes the thumbs down. Like, from the bottom of my heart, F you. That's what I can tell you. It's pathetic. If I'm investing Ming long term, should I try to wait the bottom or just buy as market as it is? Buy. Not financial advice, but buy. If you're not buying here spot and you're not exposed, you should buy, in my opinion. Wait, thumbs that guy's back. It's crazy. It's literally crazy, Brian. I'm telling you. Yo, fat. Thank you so much for calling me fat, bitch. No hard feelings. So I hated meme until your meme video. What's you after attending? With everything I see, I think a big meme run will be there in the future. Yeah, I agree. It's good. Market is just playing now, but it's gonna be good. Have the thumbs down, guy. That's what's up. Does 50% retracement work on consolidation? Yes, it does, but you need to wait for a break. So so it's very important to when you have a range. So you mark the level. So this is how it goes, for example, right? So you mark and you wait for the 50. You need to see a couple of things. Either you need to see a comeback for the 50, or you need to see a new high break to pull the new fib. Okay, so for example, let's assume that this doesn't do this. This doesn't do this consolidation, but it actually just comes back here and starts rocketing. Or better off, it doesn't come back here. It goes like this, and you wait for the 50. You're waiting for the 50, but it never comes back, but it makes a new high. So what happens is that you pull the new fib from here, okay, because there's a new high. So then you pull it from here and you wait for it. And if we see a break below here, you know that the only thing is happening that we are not getting bearish, we're just coming back for the 50. Once we come back for the 50, you can take long positions still bullish. That's what's happening on Bitcoin as well. Awesome, brother. You are awesome. C2. They saw to single click the like button or double click the thumbs down. Do you anything about heat map chart on altcoins? No, I don't. I don't really. How can I drag and use those tools? Very important. What do you mean, bruv? You go in trading view. You look up these toolbars in the left here. You select what you want, and then you click and then you pull. Like it's pretty fairly simple. Buy, not financial advice. Fucking buying bottom about fucking yeah, nice. This doesn't always play out if it's ranging. Oh no shit, really? Doesn't always play out? What am I gonna do? No, but all jokes aside, nothing always plays out. It's just a strategy that you have to back to. I mean, it's not even a strategy. It's just a fact. Comes back to 50% retrace. Can you go down on the 15-minute on the total? Maybe we're getting a break. Do you use heat map chart? No, I don't. What's better, EMA or MA? Both are shit. Love this strategy. Power. Yes. Dumb people will always hit the thumbs down. Yes, I agree. How about some 𝗕𝗘𝗘𝗢 and gummy? 𝗕𝗘𝗘𝗢, I think, very big things coming. The hate will come even more when you get more followers. Yes. Can you put the 15-minute chart in the total market cap? My cousin's sleeping here. It's like, okay. So,
Look at the votes.
what?
Look at the votes.
What is the vote?
Look at it.
What's the vote?
66% Windows and 145.
Let me tell you something for all of you voting Windows. I have used a Samsung phone. I have used a Windows computer. I have used a Windows computer, and I bought an iPhone. 2 weeks later, I've thrown my Windows out of the window, pun intended, and I bought a MacBook. I never, ever went back. It's that simple. And I've been the biggest like Windows, Samsung. Fuck that, bro. You have no idea what you're missing out on.
It's not the same.
It's the same thing, bro. It's the same thing. It's the exact same thing. Why would I not use a Windows, what is it, a MacBook? Why would I use a Windows computer? It doesn't make any sense. If you need coding and whatnot, sure, but I mean... Okay, let's move on to the next topic, which is market structure shift. I get a billion questions about this. Fefe, what is a market structure shift? Well, let me show you, my friends. Market structure shift is super simple. Super simple. A higher high or a lower low. It's a reversal. It's a shift in the structure of the market. Okay? If the market is going up and we're making higher highs and higher lows, which is, you know, we have a low, we have a high, we have a higher low because it's higher than this, we have a higher high because it's higher than this, and so on and so forth. And then at one point, we make a lower low. Here, it's a lower low. That's called a market structure shift. Okay, we are shifting the higher high, higher low, higher high, higher low structure of the market. Exact same way to the other side. When we're coming down, we're making lower lows and lower highs. And at one point, we do make a new higher high. That's what we call a market structure shift or an MSS. Now, it's very important that not every high is a market, not every high. So I see people say, oh, this is a market structure shift because we break this high. No. So the way it works is that you have to plot your trade. This is why day trading is very difficult if you don't focus on the market, in my opinion, but can be wrong. So if you look here, you have to really map the market. Like, what was my low? This is my low. Okay. Okay, my low. So this is my low here. And then I have a high. And then I have a low. And then what is my high, my proper high? This is my proper high. Okay, did I get a 50% retrace from here? Yeah, I would not call that like a proper 50% retrace, but it touches. Okay, it touches. And then we have a high. Okay, fine. Let's call this. It's actually different a little bit because we have a break here. Actually, not here. So technically, this would be the low. This would be the low, and this would be the high. And this is why it's actually a trap. This was a trap, and then we go a little bit lower into the discount. And then from there on, we move on to the higher. And then what is my low here? So my actual low, let me just delete here. I hope you guys are following, but what is my actual low here? My actual low is down here. This is my actual low because this was the lowest point that we came back to after touching onto the 50. So what is my new high? It's this one. So what am I expecting? I expect a 50% retrace. I can pull it from here as well. Or as I always said, you can pull it from the recent leg. Just come back to the 50% retrace, which is 28 at this point. But anyway, so you need to look at what is a proper market structure shift. In this case, let me just look at something that's much more... This here. This is a proper market structure shift. So you see like it's going down and it's like you have a high, you have a low, you have a high, you have a low, and it's just choppiness, and then you have a high, and you have a low, and then you have a high, you have a low, and then you have a bomb. Send it. A green dildo. Okay? Then you want to pull this to the top and you want to wait for a 50% retrace. Guess what you're getting here? A 50% retrace. A 50% retrace. This is what you're getting. This is the 15-minute chart. What do you play in the 15-minute chart? You're playing the pump at least until the previous high. Up here, right? At least. And then you wait for a market structure shift on the upside. But now I'm deep diving into the strategy, which we shouldn't do. But this would be a market structure shift on the upside, and then you could have gotten out of their position. But a market structure shift essentially is a shift of the structure. If we're making lower lows, lower high, or higher highs, higher lows, and then eventually we're making a lower low, that's a market structure shift. If we are making a lower low, lower high, and eventually making a higher high, that's a market structure shift. Now, what is a market structure break, you might ask? Well, a market structure break is when we don't shift, when we don't reverse, but we actually continue on the path. So for example, this here is a market structure shift, because a market structure break, because we have a market structure, but we're kind of breaking that structure, because we have the structure, the range, so to say, is this, right? This here, this is my range. And I'm breaking that, so I make a market structure break. I'm breaking the structure. I'm not shifting it, I'm breaking it. I'm breaking here as well. I'm breaking above. And here as well. I'm breaking above. So these are all market structure break, or MSBs. Market structure breaks. Okay? It's that simple, basically. It's that simple. If you get a market structure shift, and this is why it's interesting, for a proper market structure shift, you need to see a couple of things. Number one, and I'm not going to deep dive into this now, but number one, you need to see a market structure break first. Market structure breaks are defined by closes above. It's not just a wick. You have to close above the previous level to confirm a market structure break. And for you to have a strong market structure shift, you need to have a V-shaped recovery after creating a market structure break or closing above the previous high or previous low and create a market structure shift. Okay? And then from this is how we'll set together, because what works is that I pull the fib, I wait for a 50% retrace, and then I take a short position here and I retrace for the daily or the higher time frame, as we talked in the beginning of the show, a higher time frame order block. So I think this is, oh, and we have accumulation, manipulation, distribution, and we have liquidity concepts. Guys, I will be very honest with you. I'm getting very, very, very tired. What? And I have to still record a complete show for Banter. But let me give you this more. Liquidity is market orders. So you have several liquidities. Number one, you have trend line liquidity. You would say, oh, this is a trend line, we're going to bounce. Well, you're in for a surprise most of the time, because this is a trend line liquidity. And that means that a lot of people place their liquidity means orders. So basically stop losses. That's why market makers want to go to get their positions in. So you have a low, people place their stop losses, stop loss, stop loss, stop loss, stop loss. And you form this trend line that is a pool for the market maker to just liquidate, take all the orders, go in and create a market structure shift from a liquidation. That's how you can confirm that it was just a liquidation event and a market structure shift, which is a manipulation from the market maker. And then you can just simply move on. So we have trend line liquidity, which is any kind of trend line that you see will be taken. If you look at the lower time, let me just show you here some of this. Maybe on the hourly it's easier, but let me just yeah, okay. So for example, here you see, look at this. Is very this is a typical market maker move. Look, so you've got a trend line here, trend line liquidity. It gets taken with one candle, two, but like very viciously. And then it immediately dumps down. A lot of people go, oh, it's a breakout. I'll long. You don't long. You don't long because we didn't close above. What did I say? We need to close above. Anything before is not a market structure shift. It's not relevant. This is our range here. You didn't close above. You just took liquidity. And guess what? You also created liquidity. How? Look at this. Internal liquidity. So it took the first liquidity, created a market structure shift down here. Wigged back to 50. Look, actually it's a perfect example. I didn't plan this, but this is actually a perfect example. So you build up this trend line. It comes back. Where does it come back? Let me mark the POIs. Right? I talked about POIs, point of interest. Where does it come back? It comes back here. And what does it do? It wicks through. For a market structure shift, a wick is enough. So it's a market structure shift down here in the internal structure. Then what does it do? It comes back 50. It comes back 50% here. This would have been your shorting area. And where does it go? It probably takes liquidity from the bottom, so you would target these areas down here. So this would have been the trade. But what is interesting is that you get after the liquidation event, which came from here. Actually, you can pull it from an external liquidity as well. It came from here. You see a market structure shift here, right? And then you move higher. So we have a couple of things. Number one, we do have trend line liquidity, as I talked about. For example, this is trend line liquidity that hasn't been taken, but this is trend line liquidity. You have relative equal lows, which tend to be taken. So for example, let me just find one here for you. The lower time frames. Yeah, here, for example, it's a good example. So you can go like, these are relative equal. Yeah, the best example, but yeah, I'm trying like I won't be able to find these relative equal highs for. Yeah, this, for example, here, look. So the relative equal highs or relative equal lows. Anyway, it's not that. Relative equal highs, it's actually 3. It can be considered a trend line as well. But triple tops, double tops, relative equal highs, relative equal lows, and then the trend line liquidity. These are the most common liquidity concepts that you have. Look here as well. Look, so it's building up liquidity. And actually, shout out to Drew. I don't know if Drew is here in the comments, but shout out to Drew because on the total market cap, I said I went long on the first time when we had this big liquidation down here. And Drew actually pointed it out on my Twitter and said, I went long, and I'm very happy the people who come back here and actually subscribe to the channel, which you should do. They learn, and I was long here, very bottom. I was very long. And he was like, oh yeah, but that's actually a trend line liquidity and ought to be taken. And he was actually completely right. This is why I closed my position. But this is a trend line liquidity. And what you see here is that it's taking liquidity. It's taking liquidity here. And then it's going higher, taking liquidity from here. And it's going higher, taking liquidity from here. It's forming this trend line and everybody's like longing with stop losses. And then it's obviously being taken and then nuking. And then there is one more thing, which is accumulation, manipulation, distribution. I'll take literally 2 minutes on this. Accumulation, manipulation, distribution is pretty simple. It's just the concept that you usually see. It means that you have accumulation in the market. That means price is ranging. Then you have liquidity built up, right? For example, here you have liquidity built up on both sides. You have manipulation, which the market maker manipulates the price to the opposite direction that they want it to go. And then they cause a distribution, which when you start shorting and when you start, getting stubbed, they start buying up and pumping, or, depends which direction you're looking at it, but pumping. So it's power of 3, same thing. You have AMD, which is accumulation. Then you have manipulation. And then you have distribution. You can find this in the market everywhere, like literally everywhere, okay? Whether it's lower time frame, higher time frame, you can find it everywhere. Let me just see here, for example. This is accumulation. This is manipulation. This is distribution. You can find it here as well. Accumulation. Manipulation. Manipulation because it takes liquidity. And then distribution. Or you can find... let me just... So you can find it all around the place. You can find it all around the place. On the lower time frame, on the higher time frame, and everywhere in between. Look at this, for example. Accumulation. Manipulation. Distribution. So that's basically it, ladies and gentlemen. I hope this makes sense. I hope it helped. I hope I will study this video for days to come. Thanks, Fefe. Thank you for being here. Great show. Thanks for all the alpha. Always welcome. What moving averages do you use to day trade with low time frames? So Atlas Music, I think this is your third question. I'm very happy you're here, but you have to know, don't get stuck in the mindset of moving averages and EMAs and whatnot. I know it's difficult to get out of the mindset, but they don't help. So I don't use any moving averages. You have to find your strategy. I found mine. You have to find what works with you and just follow through. Make sure that this strategy actually makes money and it's not just someone shilling it online. You're welcome. How do we follow? I update everything on Twitter. So follow me on Twitter, and then that's basically what I do. And then we're going to have a group coming very soon. Thank you. You're very welcome. Is that you in the background? No, that's 𝗕𝗘𝗙. That's 𝗕𝗘𝗙, my friend. 𝗕𝗘𝗙 is 𝗕𝗘𝗙. 𝗕𝗘𝗙 is 𝗕𝗘𝗙. You're the best. You are the best. Guys, please leave your review of the show. I'm going to get going. Thank you so much for watching. Appreciate every single one of you. Please leave your review right now. I will include that at the end screen. Thanks for watching. Truly appreciate you. Smash the like. Oh, I'm going to show you one more thing. Look at this. Is that the total? Look at this. Look at this on the total market cap. Look what we see on the total market cap. What does it do? We should come down 50%, right? I told you, after the break, we need to see a 50% retrace. But look what it does. If you go down on the lower time frame, where did it come? Yes, it came back 50. Came back 50% on this leg and moved on. This is how accurate this is. Guys, thanks for watching. Leave your vote. See you. And you're awesome. Thanks. See you around, guys. Much love.